So this paper is a question paper of 2020 new scheme. So NS stands for new scheme and 30 stands for the code number of second PUC accounting. So page number 19, you have a 12 marks question. Page number 19, problem number 27. So here you find Sheetal and Sharath were partners in a firm sharing profits in the proportion of 3 by 4 and 1 by 4. It is nothing but 3:1. Their balance sheet on 31/3/2019 was as follows. Look at the assets, cash at bank, bills receivable, debtors, stock, furniture, land and building. Liabilities side, you find creditors, reserve fund, and capitals of Sheetal and Sharath. On 1/4/2019, Renu was admitted into partnership on the following terms. So, A, first one, Renu pays 15,000 as her capital for 1/5 share and rupees 8,000 for goodwill. So, from this, you have to identify whether goodwill is brought in the form of cash, whether the goodwill has been created or valued, we have to check it out. Next, from this sentence, if you are not able to understand, read again and understand, read again and again to understand better. From this, you will come to know Renu getting 15,000 as capital and 8,000 for goodwill. That means cash is coming into business. Underline the word pays. That is very important. That is nothing but cash. They are not use the word cash, but the word pays is equal to that cash payment only. Next term, that is B. Half of the goodwill is to be withdrawn by Sheetal and Sharath. So underline the word half. Next, C. Stock be reduced by 10%. D. 5% provision for doubtful debts be created on sundry debtors. E. Land and building be appreciated by 20%. F. An item of 1,800 included in creditors is not likely to be claimed and hence should be written back. Instead of written off, they use the word written back. It's the same thing. Written back and written off is the same thing. So 1,800 to be reduced from creditors in the balance sheet. Prepare revaluation account, partners capital accounts, and balance sheet of the new firm. This is the problem. As I told, usually this goodwill treatment is the one which comes for the examination. So you have to be ready for that only. So I'll be starting PUC board question paper, March 2020, problem number 27. 12 marks problem. So we have to start with in the books of the firm, revaluation account. So revaluation account adjustments to be identified. A and B connected to capital and goodwill, so it won't come. Some C onwards, C to F, all adjustments are connected to the revaluation. So first one, stock to be reduced by 10%. So decrease in asset, it is a loss to stock account. Stock is 20,000. 10% will be equal to rupees 2,000. Next, 5% provision for doubtful debts be created on sundry debtors. Debtors is 16,000. No provision existing. So first time we'll be preparing the provision or providing for provision. So on 16,000, 5%. This is also reduction of asset. So PDD account, provision for doubtful debts account, 16,000 multiplied by 5 by 100, that is equal to 800. Next, Land and building be appreciated by 20%. Appreciation is increase. Increase in asset is a
Credit side.
gain. Very good. Gain. Land and building 25,000 is there. So credit side by buildings account. $25,000 into 20%. That comes to 5,000. Next, F adjustment. An item of 1,800 included in creditors is not likely to be claimed. That means creditors will not ask 1,800. So business need not pay 1,800. So liability will reduce. That's what they told, and hence should be written back. So decrease in liability will be on the credit side. So it is a gain to be taken on the credit side of revaluation account, creditors account. It is not a provision or reserve, remember. So C, D, E, F, all four adjustments are done. You can go for balancing. Which side is more, you can identify. Credit is more. So I have taken the credit total 6,800, but I have to deduct this two entries therein. So balance will come as
4,000.
4,000. That 4,000 to be divided among old partners, capital accounts. It is a profit for the partners, or we can also call it as gain for the partners. So this 4,000 is balance amount. The meaning of that is revaluation profit because gain is more. So we have to divide this amount among the old partners. Sheetal, 4,000 into 3 by 4.
3,000.
Yeah, if you want, you can see here the ratio or proportion 3 by 4 and 1 by 4. You have to remember. So 3,000 to Sheetal. Sharath, rupees 4,000 into 1 by 4.
1,000.
Good. So this will go to partners capital account later. So first step, you have to double check whether all the adjustments are considered for revaluation, whether it is done properly or not. This is the starting point. If the first step goes wrong, a lot of things will go wrong. Next, coming to the next part of it, connected to capital, Renu pays 15,000 rupees as her capital for 1/5 share. So Renu is paying the capital. So journal entry for capital brought in by the new partner in cash. So that you can see therein now. So for that, we have to make an entry. First, you have to check cash at bank or cash in hand. So you have here cash at bank. So we have to take it as bank account. Bank account debtor to new partner name Renu account or Renu's account. It cannot be Renu account, Renu's account. 15,000 rupees debit, 15,000 credit. So narration is same as the heading, being capital brought in by new partner in cash. Next is goodwill part. Identify carefully when goodwill amount is brought in cash by the new partner and withdrawn by old partners. This is the situation. So you can see here in this, and rupees 8,000 for goodwill. So Renu pays rupees 8,000 for goodwill. Half of the goodwill is withdrawn by Sheetal and Sharat. That's what I have given therein. When goodwill amount is brought in the form of cash by the new partner and withdrawn by old partners. So here I'll go for first entry. Similar to the capital entry, bank account debtor to new partner's name, Renu's capital account, goodwill amount 8,000 rupees, first entry. Second entry, goodwill to be divided among old partners. So Renu's capital is credit here in the previous entry. Here Renu's capital will be debit. That is an easy indicator for you. That will tell you you're on the right track. That amount to be divided among Sheetal and Sharat in their sacrifice ratio. So that is nothing but 3:1.
6,000 and 2,000.
Yeah, 6,000 and 2,000. So in journal narration for the journal entry, you can see being goodwill rupees 8,000 brought in by new partner, distributed among the existing partners in the sacrifice ratio. That is 3:1 is equal to 4. The next is very important. Adjustment B. That means goodwill brought in has two entries, remember. And for the adjustment B, only one journal entry. Half of the goodwill is to be withdrawn by Sheetal and Sharat. So Sheetal's capital account data, Sharat's capital account data. So because we have here cash at bank, it is going to be two bank account. So remember half of full. So half is the word here. You have to be careful. So half of 6,000 is the amount withdrawn.
3,000.
It is 3,000. Good. Then half of Sharat's goodwill amount. That
1,000.
is 1,000. Very nice. Very good. So out of 8,000, 4,000 gone out of the business. Narration I given very clearly, being half the goodwill amount withdrawn by old partners. So this is the one to be remembered. No, sir, I don't want to have this working. I will work straight away in the capital accounts. I have a confidence. Definitely, yes. You can go for straight away entries in the capital account. No need of any of this. So to start the capital accounts, we have to go for capital account value that is appearing on liabilities side. So liabilities show credit balance. So Sheetal account 30, Sharat 16. So it comes to the credit side. It shows credit balance, remember. And Renu is not yet become a partner. It's the first step. The second step is searching for reserve fund. Yeah, we have here reserve fund of 4,000. That 4,000 to be divided among the old partners. 4,000 rupees in 3:1 ratio. So very easy to calculate, 3,000 and 1,000. The next is searching for profit and loss account. We don't have profit and loss account. So next is revaluation profit or loss. We have a revaluation here. Profit 3,000 rupees for Sheetal and 1,000 rupees for Sharath. That to be taken over here on the credit side. So step number 4. So step number 5 is the capital and the goodwill brought in. Adjustment A. Renu pays 15,000 as a capital for 1/5 share and rupees 8,000 for goodwill. So both in the form of cash. So capital and goodwill brought in 15,000 rupees plus 8,000 rupees.
23,000.
Very nice. 23,000 amount. So that is the first part of it. That is, remember this entry. Bank account debtors to Renu's capital and bank account debtors to Renu's capital again for goodwill. The next is the one very important, the adjustment 2 or entry number 2. This will come for all goodwill situation. This has to come on credit side as well as debit side of capitals. Very, very important. So first I'll go for here credit by Renu's capital account, goodwill of rupees 8,000 to be divided in 3:1. That is the sacrifice ratio. So 6,000 rupees and 8,000 rupees. So this has to be debited again to Renu because Renu is giving that to the other partners. It is deducted from Renu's capital account. That is to Sheetal's capital account 6,000, to Sharath's capital account 2,000. It has to be deducted from Renu. Renu is giving that goodwill to the new partners. This is the one. The next part of that is half of the goodwill withdrawn. For that we have an entry here. Sheetal's capital account debtor, Sharath's capital account debtor to bank account. So Sheetal's capital account and Sharath capital account debtor, I have to go for to bank account. So narration, if I give there, of goodwill is withdrawn. So half of that is 3,000 and 1,000. So what is that half? So whatever goodwill you are given in the credit side, so half of 6,000 is 3,000. Half of 2,000 rupees credited, debit, you are debiting here 1,000. So through bank account, money is coming down, money is reduced. So this is for the goodwill withdrawn. Now we can go for totaling. On credit side, it is looking more.
Sheetal is 42,000, sir.
40. 2,000.
42.
Good. So now balance one by one. So the capital amount only is remaining for Renu because goodwill is given away. So for Shital, 42,000 minus debit 3, that is 39. For Sharath, 20,000 minus 1,000, that is 19,000. That becomes closing balance carried down. There's a balance amount. This balance amount becomes opening balance for the next day. So two opening balance brought down 39, 19 and 15,000. Next is bank account. So here cash at bank is there 30,000. So opening balance of bank 30,000.
Sir?
Ah.
Sir, here the new opening balance brought down. It should be by opening balance brought down, no, sir.
Asset shows debit balance. So two opening balance. If it is a liability,
Capital account.
yeah, it is a liability by opening balance.
Sir, down, sir. In the last, sir, in the last.
So here Renu is getting 15,000 for capital and 8,000 for goodwill. So 23,000. Then the partners have withdrawn the money. So Sheetal's capital account withdrawn amount is 3,000. You can see here to bank, that becomes here by. So by Sharad's capital account 1,000. You have to see this. Debit side has come. So bank entry will come to bank. There is a double entry system. So 53,000 minus 4. $49,000 cash remaining in the business. So Sharath has been admitted into business on 1/4/2019. So the new balance sheet will be on that day only. So here bank balance 49,000. I will take that to the balance sheet, cash at bank straight away. So bank closing balance will come here to the asset side of balance sheet. Next, we'll go for revision of the balance sheet. Look at the asset side first, then liabilities side. Cash at bank is done. Next is bills receivable, 4,000. No adjustment, so outer column. Next, debtors 16,000, but we have an adjustment D for debtors, 5% provision. Debtors 16,000 less PDD 5%. So outer column 15,200 after deducting PDD. Next, stock 20,000. We have an adjustment for stock to be reduced by 10%. Remember. So stock less decrease 2,000 less Next, furniture 1000. No adjustment for furniture. So outer column, same amount. Next, land and building 25,000. We have an adjustment for land and building. So inner column amount, original amount. Add appreciation 20%. That is 5,000. So the outer column amount after addition, that becomes 30,000. So asset side all are done. Come to the liabilities side. First one is creditors. We have an adjustment for creditors. So amount of balance sheet creditors to be inner column. Next, last adjustment. An item of rupees 1,800 not likely to be claimed means to be written back. That is less. Written back 1,800. So outer column 14,200. So liability decrease 1,800. That is how it becomes gain for the business. Next item of the balance sheet, reserve fund. Already we have divided, so it won't come. Next is capital accounts. First of Sheetal, Sharat, and Renu. The capitals we have to take it from capital account. 39,000. 19,000. And 15,000. Next, we have to see, as I told you always, check the revaluation account. All adjustments should appear, must appear in balance sheet, then only your balance sheet will tally. So land and building is taken, creditors are taken, stock is taken, PDD is taken. So all 4 adjustments are taken in the balance sheet. You can ensure PDD is done, stock decrease is done, appreciation is done, return back is done. Now you can go for totaling very confidently.
So 1,17,200.
Very good. Check on the liabilities side also. Now, creditors is 46,000. It's not 16,000. 46,000. The creditors is 46. I have taken 16. Yeah, now you can check.
It's tallying, sir.
Good.
Yes, sir.
So this is how you have to go ahead in the examination.